welcome to our webcast, a short video interview offering you a close-up learning experience with NN Investment Professionals' leading professional, Ghielen. The recent developments within the global economy sure have given us a roller coaster ride. Can you tell us something about the moving parts?
Indeed, we had a positive quarter for equities, and indeed a very interesting one. First of all, we had the announcement, the long-awaited announcement of the ECB on the quantitative easing. We had a stabilization of Ukraine and Russia. Greece quieted down a bit, and also the oil price stabilized at a low level. What is a very important development over the quarter was the euro, the further decline of the euro. The euro compared to the dollar declined by 10%. That was an enormous decline. What we saw as a result is that the European equities outperformed, driven by further earnings growth, driven by the exporting sector of the market.
And that was quite clear and concise. Now consider yourself clocked. You've got 31 seconds or less to take us through the style developments of the first quarter.
What we saw in the first quarter was a continuation of the growth outperformance versus value. So investors preferred the defensive growth side of the market, like healthcare, but also sectors that gained from the strong dollar. Increased consumer spending like the automobiles. Those two were the best performing sectors in the first quarter. On the negative side, the more value-biased sectors like utilities and energy were the worst performing sectors.
I hear you mention some upside, but the performance was struggling. So give it to me straight. What's up with that?
Indeed, first quarter was a difficult quarter for high dividend funds. The value style underperformed. Investors kept chasing the winners of the past, the stocks that outperformed in the past, the stocks with high price momentum. We think that that segment of the market has become too expensive. So we prefer, as contrarians, to look for the undervalued names with sustainable dividends. So
like the famous ABBA song goes, the winner takes it all. Who's going to be the winner in the next quarter?
Well, we prefer to have a bias towards cyclicals at the moment, especially in Europe. Cyclicals with strong balance sheet and undervalued growth potential, dividend growth potential. For instance, financials, we prefer financials above consumers and healthcare. Financials, they're more geared to the economic recovery, better credit situation, and also loan demand is picking up. Many healthcare and consumer goods have too high a valuation. We think that this part of the market is too expensive. So we remain confident in our positioning as we see proof that Europe is recovering, and we believe that this situation is going to give us better performance in the future.
Carl, thank you. Now, if you want to learn more about our strategies, do please visit us at nnip.com for more information.